Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, August the 4th, 2026. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. High level overview, my friends, is we have wave 1 done, working on wave 2. Emil, Ian, James, Mr. Tucson, and others, this is just, is it over? We're ready to go blasting off? Maybe. Or are we going to fizzle and still go lower low? This wave 2 is definitely too early to call, saying it's definitely over. The probability it's over, yes, there's a possibility, but is it extremely high probability it's totally over now? It's a little hard to say. So my rule is, as long as it's below the pink box, we still have pressure to go lower low. Doesn't mean we have to go lower low. This could be the end. But if we start breaking down further, then the probability we go lower low starts to become very high. So we do have some definite make or break levels to watch. And the big picture is, hey, as long as we're below the pink box, we still have more pressure to go lower. Once we're above the pink box, then we can call this wave 2 done with a high degree of confidence. While we're below it, we cannot say this is done with a high degree of confidence. And I can't say either that, well, I guarantee, Mr. Tucson, we're definitely going to break a lower low. The chart still shows possibility of lower low, certainly. We could go deeper. Certainly. But once we're above the pink box, the likelihood we're going to break above the pink box, come back and make a new low over here, then go blasting off, that is extremely low probability. Once we're above the pink box, high probability we're going to keep grinding, stair-stepping, probably over the year or so or longer, multi-year, and work our way toward that 130 target. The big target is from 120 to 140. Middle of that road would be 130. That would be your ideal spot. So where do I definitely think we're going? 130. But could we go lower first before we get to 130? You betcha. So let's jump into the charting platform, and we can see that we're kind of stuck in a zone. Emil, we said this last week, that this was very dangerous, that from this prior low, we had this, actually, let me pull this back a little bit to show you that. From the prior low, we had the proportions of a three-way move, A, B, C. Now, why did I say proportions? Where A typically equals C, whatever the move of the A move up, then you get your B correction. The C move up is equal, or it can extend a little bit of A to the 1272 to equal C. And that's what this did. It went on to the 1272 area, and this is typical of an ABC type of move, not a 1, 2, 3, right? A, B, C. If this was going to be the 1, 2, then this typically grinds at least to a 1618 or more. Then you get a correction. The key about the correction after that is it must stay above the wave one top. So that would be over here. And if this were to go up here and then we correct down in here, then go on up, then this looks impulsive and it starts to say, yeah, guess what, Mr. Tucson? And we might have a bottom. That could be it. That could be our wave two down here, and it is over. But I warned you last week or so, as this was grinding, that if we stop here and don't go 102 or higher, then the probability is we're going to get another correction. Well, as the software was lining up, go back over here to the software, we watched this together and we said that our daily was getting in overbought territory as we started to top out over there, as you can see. And I warned you, I said the proportions of that three-wave correction stopped exactly where we were likely to see a correction back down. And I warned you with the daily being overbought, we were likely going to get that correction coming down. We talked about that initial push up that we at least needed to correct where we broke out from. So we spent about a year trying to break this red line, and we kept testing it and testing it, and then finally we broke it. We retested, bounce, and typically in a bullish type of breakout. When you break out, you typically don't double tap, triple tap before you go breaking out. You typically will break out, come back and retest, then go blasting off. Well, it kind of looks like that. We came up, retested, went up to about a 618, failed, tested it again, and then we ended up with a lower high. So if you'll recall from last week's conversation, having this lower high, and this looks proportions of an ABC, that really sets the tone for a deeper correction, right? And so far, we did exactly what we were looking for. We talked about come and visit the magic Fibbo / our 618 area. And what did we do, my friends? We came test the magic Fibbo / 618 area. What is this light green box, you ask? That is from that prior low up to that high. You can see my 618 level / 786. It's kind of that with the magic Fibbo. So this is critical support. Absolute critical support. If we break below it, then the likelihood we're going to break one of our make or break levels down here becomes very important. So if we can't hold this and we start breaking down and we close below this swing point, then that sets the tone we're going lower low, which means this low down here is not over, right? And we've seen that phenomenon for months now and months. Are these swing point lows and we get a little pop, is that the end and we're ready to go breaking out? And we talked about this chopping and overlapping proportions. Nah, this didn't look right. We came back to retest a former support zone, turned it to resistance. Ultimately, we went lower low. Then here was another one. We got a nice pop. We did a three-wave correction. This move again, A equals C, stopped in the parameters of a correction, not a 1, 2, 3, 4. And we notice if that was the 1, 2, 3, the 4 came back into the area of wave 1, which set the tone that it's still corrective. And what happened? Like we warned, we would go lower low. Then yet again, here in September of last year, we started this chopping and overlapping. We grinded, we tested the resistance, we tried it again. And sure enough, we did the same type of deal where we bounced off a 618 retracement from that high to this low, went a 618 retracement to the tick, and then we failed and we ultimately went lower low. So we've been doing this little dance where, Emil, is this low the low where we go breaking out? No, we went lower low. Is this low the one? Nope. No, the three-wave correction, we went lower low. Chopping, overlapping, ultimately lower low. Now this one again, on a bigger scale, bigger than this one over a little 3-wave there. This is a bigger scale. We did a time-consuming 3-wave correction. That's not bullish at the moment because we stopped at a ABC type of proportion, not a 1, 2, 3 proportion, which would have put us above the 1618 or higher. So when you always look at that and say, okay, if it stops an ABC correction, you keep the lower high scenario, what's the likelihood it's just automatically going to go breaking out from there? Extremely low, right? Extremely low. Could it happen? Sure. In these crazy environments, markets can do anything. Doesn't have to do anything particularly, but typically it follows chart patterns. That's what it ultimately does. And I warned you about this last week on this rally. I said, if you're up on that bounce, you need to be taking a profit because I see this thing at least coming back. And I made a statement. If we can close below this green line, which again, for a year, we tried to break out. We finally did, retested, did a double tap here, bounced, and then what? We ultimately broke back down. And I said, if we close below that, where will we go? We'd go to visit the magic Fibbo /618786 zone, the pink box. Excuse me, this light green box. So, Emil, if we break down below this, then it says we have a 75% chance we're going to go visit the 1448 extension. We have a 70+% we're going to go visit the 1272 extension at 9650. Both of those are below this swing point. The A, the B, the C, you break below that swing point, and that says highest probability we're ultimately going to break down to a new low. And what if we do that? Then it's rinse and repeat. Nope, that wasn't the bottom. Nope, that's not the bottom. Nope, this isn't the bottom. And yet again, we break below this swing point. The probability this is going to go lower low is very high. Is it possible we could make a higher low of some type and then go make a higher high? Anything, again, is possible. But if we start breaking below this swing point, it sets the tone. We're going lower low yet again. Fair enough? All righty. So be careful. Yes, this is a bounce that it could go blasting off and going to new highs. Sure. That's a perfect place it could, because from the recent low up to the high, it is a 618 type of retracement / daily magic Fibbo. But if we don't hold this and we close into this lower green box and we start taking out, say, 99, then it kind of sets the tone. We're going to go visit this 97 down here. We go visit the 97, 96 down here. That is below that swing point. This A, B, C, that swing point, right? So what happens if we close below this swing point? Just like we close below that green line, we would go test that. We close below this swing point, then we're likely going lower low. Pretty straightforward, plain and simple. Highest probability. Amen? That is the plan. So be careful. And when we talked about this little pop-up here and how the daily and the weekly were overbought, we were looking for that correction. And then even after we got this decent bounce again going in last week, I kept warning you, I did say it, that this is still at a lower high. Be very cautious. If you took this bounce and you were up thinking, yeah, this is the breakout, here we go, I said, be sure you're in a position of authority, because with a weekly overbought turning down, a daily overbought, we're likely going to push lower. And we close below that, we ultimately went exactly where we expected. So if we do start closing below, say, 99, then the tone is set for us to go down toward 97. And why 97? That low, that high, you break the 618 around that 99, then it sets the tone 75%, which is a high percentage. We're going to 97. And that is below that magic swing point here. So we close below this light green box, we're likely going to test these, which is below that swing point, aka we close below that swing point, a daily candle body. I don't like to count wicks. I like bodies of candles. But once the body closes below this swing point over here, then the probability we go lower low is very high. And lo and behold, Emil, that story continues. That is not the low. We're going lower low. What would the targets for lower low look like? You just take the bigger picture, and that 618, we start closing below that 97. Why is that important area? It is the A, the B, the C bottom, but it also from the recent low up to the current high, that's my 618 level. So now, ladies and gentlemen, we start closing below 97, which is the point we just mentioned. We reach this 97 down here. Then that says now we have a 75% chance we're going to visit 94, 70 plus 93. And if we get a little feisty to the downside, that can open the door to this 91/92 area, kind of where I was thinking we're ultimately needed to visit, right? What if it's not? What if price proves otherwise? We got to go breaking the high. We need to close. And this is what I've been saying for months. We need a physical candle body close above 102. Why 102? That's the short squeeze that occurred last year. The big trade was anything but the dollar, short the dollar. When the dollar was up here, I talked about we definitely needed a lower low because our reversal point 4 years ago, made a bold statement back then, right? After a multi-year bold statement saying that we were going to go to 115, 120, we stopped at 114 and change up here, 114.80 on this platform. And we stopped just shy of that 115 target. And I said, hey, we're going to get a big correction that's going to last multiple years on the dollar index. That's what this is on this bigger picture. That's this top and reversal, multi-year correction. Well, I keep bringing that up and hammering that point home because it is a correction and we're ultimately going to go breaking out to new highs. Question is this it? Do we need to go lower then do it? Or do we even go deeper and do it? And then we do. This is not off the table down here yet. And for reasons that I'm going to show you, from this COVID low up to the high, we're already closed below a 618 low. It's at 618 around that 98. We have candle bodies that close below that. So the extension on this would be to go somewhere around that 85, 82 level, which puts us right where we originally talked about from this 2008, early 2008 bottom to this target up here in 2022. That we could still correct into this 618-786 zone, right? So bring that back over to the charting platform, and we could see why these levels are in here, 85, 82, from the COVID low up to the high. You break the 618, which we've done, you're likely going to visit the 85 and the 82. Is it a guarantee? No. Is it a higher probability we still need to go lower than break out right now? Yes. But if you really want to get a little interesting conversation, is that even though we have a 75% chance we're likely going there, I am personally 1,000% confident on a 100% scale. That's pretty damn confident when you say 1,000% confident on a 100% scale that we're going to go visit that 120 to 140 target. Ideally, I think we're going to 130 because it's in between. So whether we go low or low, we're going there. Whether we reach that extension down here around that 82, 85 we were just talking about, we're still going up there. Or we've already bottomed and we ultimately just start breaking out, close above 102, start grinding multi-year type of move up here. All roads lead to this 120 to 140, aka 130 target. And I definitely, without question, think we're going there. It could be a multi-year type of move. It does not have to happen in days, weeks, or months. It even could take years to get up there, but that's, in my humble opinion, exactly where we're headed. Now, the question is, do we need to go lower low before we get there or even reach those extensions down here, that 85, 82 zone? Then we go. Well, it's still technically in the cards that we're likely going to go visit that 85, 82, and it just starts by breaking below this green box. We close below that swing point, we go lower low, then we continue to do this. Is it more of these where we keep going lower low, lower low, lower low, lower low, do another correction, lower low, another correction, lower low, and the next thing you know, we're down here at that 85 zone. We're pushing where we originally talked about, and then this thing goes blasting off. I would be remiss to throw out that at some point this wave two, whether this is it and we're going to go breaking out, or we go lower low and we go breaking out, or we go very deep and we go breaking out. All roads lead to this wave two somewhere in this area of that low now and this original target zone at 618786 for us to reverse somewhere in this area to go breaking out. Well, to simplify things, if we get above the pink box, it's over and we're going. If we stay below the pink box like we are, then we still have pressure to go lower low. Right? So I put all that together and then we throw it in with the software. And that's why going in last week, I said the same thing. The daily's overbought. The weekly is overbought. And we're likely going to get that correction. Weekly's turning over. We got a PAI hook, trend momentum cross. We got steep slope. We got angle separation. So what did I say during this period of this chop up here? Be careful. We need the daily to cycle down, right? And what did the daily do? That's the security of this software. When you get a weekly hook and a cross, steep slope angle separation like that, the daily cycles. And notice where we are. We're almost there. The PAI, we got red and blue down there. Money flows right at it. But this trend momentum is still just a little shy. So I would not be surprised to see this thing grind a little bit lower while this pushes lower and my weekly continues to push and push lower. So far, so good. Now, what if we get a full weekly cycle down? We did say that what if we get the daily cycle down, we're going to go test that magic Fibbo 618 level. Well, what if we end up getting, ladies and gentlemen, not just the daily cycle down, but this guy right here cycles down, and typically takes a weekly about 2 to 5 months to cycle down. So over the next several months, moving into August, September, October, somewhere going into the fall, this thing could cycle down and we could make lower low. Once we break that 618 from the prior low up to the high we just talked about, we break that 618, aka the swing point right here, Mr. Tucson, the likely we go lower low is very high. And what would it take? I think it would take the weekly to cycle down. So it's kind of setting it up. This does not have to decline in the next week or two. It could take a couple of months or so to get down here. That's what a weekly cycle says. It takes about 2 to 5 weeks for this to cycle. 2 to 5 months for a weekly to cycle. It takes time. What if we get it? Then we're very much likely going to get a lower low over here. Amen? And that's where this target comes in, Mr. Tucson, right there. That's where the target comes in. So let's just rinse and repeat and Ron Popeil style, slice and dice. We talked about the lower high last week. The weekly still turning over, the daily likely cycling down. If we were to close below this green line, we would definitely go visit the magic Fibbo /618 zone, exactly where we're testing. If we don't hold this and we start closing, here's the next line in the sand, right around that 99. My 618 is 99.20 area. So we start closing below that 99 area, sets the tone. We're going to go lower low and visit this 97. Why is the 97, 96.50 area important here? Because if this is the A, the B, and the C, and we break below this low of that B wave, which these extensions would bring us to, then the probability we actually go in lower low continues like we've been doing. Lower low, lower low, lower low, and the beat continues. And that's why last week when we kind of ripped up there, last few weeks, I said, look, the weekly's overbought, the daily's overbought, be careful. We're at least going to get a retest of this breakout. That worked. Then we bounced. Great. And even on the bounce going in the last week, I said, be careful. We're at a lower high. The daily's back overbought. The weekly's still in overbought territory. Be awfully careful that if we do close below the green line, we're going to go where? Magic Fibbo / this 618-786 zone. That's exactly what we did. How about that? Talk about read and interpret price. It's a God-given talent, but the technical picture screams it. So again, down here, again, rinse and repeat. Let's compress and compact the channel. Emil, we close above 102, right there, that guy right there. We get a candle body close above 102. 102, see it right there, 102. Take that off and I'm going to circle it. There's my 102. So we close above 102. Then in my humble opinion, we're going to keep grinding higher towards that 104, 107. That's a big if. We got to reverse, close above here to go higher. Could it happen? You betcha. Does it have to happen? No. Is it extremely high probability it's going to happen? No. Not until it does, then it is. So where's my high probability piece of this equation? Close above 102, look for about a 2 to 3 point run. That's, in my humble opinion, high probability. Now, what happens if we continue to squander and we can't hold this 99 area? Then we're likely going to go lower low than the swing point, which would be the extension 97, 96.50 area. And we close below that. Now we then say we have a 75% chance we go into 94, 70 plus, we're going to 93, which again is a new lower low. So split it, close above 102. We're going to 104, 105 to that, basically 104 and change to 107 level. Nice 3 point-ish move, high probability. What if we squander and we continue to close below this swing point down here? Then the probability we go lower low is very high. So we start closing below 97. Then it says we got a 3 point-ish type of move going down to 94, 93, and might even get a little feisty down to that 92, 91 zone. You can see it's a little bit further down, that 92, 91 zone. So basically, rinse and repeat. We close below this swing point. We're likely to make about a 3 point run down. We close above 102. We're likely going to grind higher toward that 105 to 107 level. Fair enough? Where do these levels come in? Extensions. Everything is about a Fibonacci extension. You don't believe it? Then you need to. Because the price action rinses and repeats to these areas. Where's this 104 and change, 107 level I'm referencing? From the prior high to the low, it happens to be the magical 618, 786 numbers. So again, you close above 102, where are we going? 104 and change to 107. So that's about a 3 point run. We close below this swing point of 99 down here, then we're likely going to go visit the 97. We close below 97, which is the what? That low up to that high. So I'm going to expand that view for you. So from this prior low up to the current high, we close below 97, which would be down here. That's why I'm saying A. We close below 99, we're going to visit this down here. We close below 97, we're going to visit the extension down there. So basically, close below that swing point, got a 3-point type of run down or more, and we close above 102 up here, then we have a 3-point run up. I do think both of these are very high probability. Close above 102, we're going to 104 to 107, which is a high probability. So I'm going to round it off about a 3-point run. And we close below 97 down here. The likelihood we go to 93, 92 area becomes very high. Got it? All righty. What has that done to our pound, yen, and euro, pound trade, etc.? What did I say last week? Let's go back one more time before I change that and go to the dollar index. I did say if we close below the swing point, we'd go visit the magic fibbo. And if we go visit the magic fibbo, what was the euro dollar going to do? What was the euro dollar going to do if we made a run toward the weekly, or in this case, the daily magic fibbo, dropped and lowered down and moved lower toward the daily magic fibbo, which is this big orange line right there? We would visit it. What would the euro dollar do? The euro dollar would rally and visit its magic fibbo. Well, looky, looky. It ran up and tested the magic fibbo. So we're talking about if the dollar closes below 99, we're likely going to make a run toward 97. And if we can close below that 97, we were going to go lower low. Well, this is in the inverse. We tested this. If the dollar breaks down and starts moving toward the 97, the euro is going to make this bigger move, A, B, C, in the inverse direction. We're going to make a move toward this 115 up here. If the dollar closes below that 97 level, seeking out the lower low, which would be my 93, 94, 93, 92 zone, then do the inverse of that. The euro would go breaking this swing point. We're likely going not only there, but we're going to go to a higher high. So what do those numbers look like, Emil? Well, you can take your 2-point tool, and from that high here down to this low, if we can close above that swing point, just like on the downside for the dollar, we go lower low to the extension. Well, this is the inverse. We close above this swing point here to the upside, basically closing above about 118, 118.50, maybe 119, because we got that major battle zone over here. So it's right at 119, come across, and then we got this little peg here into 18 plus. So if we can close above 119, but I'll even call it earlier than that, we get a candle body close above that swing point right there. Highest probability we're going to 121.80, 122.80. Got it? So like we said before, if the dollar declines and reaches its daily magic fibbo, the euro is going to rally and reach its magic fibbo. We don't hold the fibbo and the dollar continues to break down. We're going to break above this fibbo and start heading toward that swing point. We reach that swing point and we close above it, then we're going higher high. And if that's not enough to keep you interested in buy dips, we said it 4 years ago when the dollar topped out at that 114 and change, the euro bottomed down here at that 0.95 area in this zone. And then what happened? I said 4 years ago, you might want to consider, actually 0.3 there, you might want to consider going long. It's going to take multi-year correction, but it would move thousands of pips. And it's done that. And plus, Notice this. From this recent high to low, we took out the 112.80, which is a 618. So way back here in 25, we have a 75% chance we need to go to 127. We have a 70+% chance we basically go visit 131. Later, we actually closed above the 786. So you break the 618, you got that 75% chance. You break above the 786, it reconfirms you're going up here. So is it possible this is the end and we make another lower high, lower low? Well, just like I said with the dollar, we break above the pink box, it's over. We break below this green box, it's over. We're going lower low. Any questions? But for now, this looks more bullish than bearish still because we're above the green box. We're above the magic fibbo. We're working on that. Right now, that's the monthly. And we came down, tested, and we bounced off it. That's bullish. Excuse me, that's the weekly. I'm on the weekly. Got to look at my time frame. And what's the likelihood we're going to rally and break above? The dollar breaks down, the euro goes higher. The dollar goes higher, the euro goes down. Inverse relationship. Someone always asks, why is the dollar inverse to the euro dollar? Well, dollar is part of that equation. It's in the secondary position. So if our dollar index is strong and it's ripping higher, then this secondary position is strong. That means this goes lower. If the dollar is weak and our dollar index is going down on the chart, then this euro dollar is going to go up because it's in the secondary position. Fair enough? So with those parameters, we broke the 618, likely go and visit that 127. We broke the 786. We reconfirm. We're likely going to go visit that 130. So that's why I keep saying, let's keep buying the dips in the uptrend, get to position of authority. This would set it up, but also remember the same. I'm 1,000% confident on 100% scale. We're going to go lower low. Lower low than what? That low right there. So this is corrective. What I said 4 years ago, it'd take multi-years. This thing could still go another year or so to get up here and then go down, or it can start declining once we break this green box. We're definitely going down there. So whether we topped out now, all roads lead to down here. Whether we break to a new high and reach that target up here, then we break down, or we just make a somewhere a higher high in between the two. All roads lead to this lower low, just like all roads lead to the dollar going to that 130 target. Dollar reaches 130, euro dollar is definitely back below parity and making lower low with the target somewhere between that 0.8 to 0.7. Got it? Same thing for the pound dollar. You look at the exact same dimensions, what we just discussed on the euro. We have the same thing here on the pound, and the prior high to that low, which was 4 years ago. What did I make the statement then? No buy, sell to hold. I can't tell you what to do. That's not my job. I don't even play a financial planner on TV. But it's God-given talent to read and interpret price. The software setup, the technical picture was screaming, we're due for a multi-year bounce, and it's going to go thousands and thousands of pips. And right now, from that recent high to low, we took the 618 out much earlier than the euro did. We did it back in 23, and we have a 75% chance we go and visit 147. 70 plus, we're going to visit that 152 and change. And just like the euro, we later in the equation, we actually closed above that 786. So we reconfirmed we're likely going up there. Got it? So is this a guarantee? No. This thing could break below the green. It's going lower low. And this is off the table. These targets up here would be a big fat X off the table if we can't hold this green area. We're so far thousands of pips above, 1,000 plus anyway, above that green box area. So as long as we're above it, the likelihood we go up here is still higher probability than the likelihood this thing breaks down. Once we get below this, the likelihood we go visiting lower low below that swing point of that 103 becomes very high. And I'm targeting 0.9 to 0.8. We get a little spicy, maybe 0.7. So we got a big zone down here. All roads, even if we go up to where we're talking about first, all roads lead to this coming back down. No ifs, no buts, no ands. Only question is because of that high and that low, EMEA closing above the 618, 75% chance. Close above the 78, reconfirm. We're likely going to visit that. So that's why I've been saying for years that it's a multi-year correction, thousands of pips. And look, we're above that 3378 right now, almost 100 pips above it. And we were even more than that, reconfirming we're going up there. So that's why it's high percentage chance we're likely going to go higher first before we ultimately go down here. What's the make or break? We can't hold the green box. That is off the table up there, and we go lower low. Fair enough? What about the euro yen, pound yen? I warned you. I kept just preaching to the choir, my friend, that Emil, look out. This chopping sideways action, even though it looked like, ooh, yeah, baby, we're going breaking out. Your rules said we should probably go to 88, maybe 89 up there. And I was warning you, I said, look, we're still at a lower high. Our software is extremely overbought. So when I'm looking at resistance and I look at this prior chopping, overlapping, grinding price action, what did I tell everyone? We need a lower low. Remember that target? I was just preaching to the choir, and you're like, no, it's never going to happen. It's never going to happen. And the more chopping, overlapping, we kept going, we kept going, we kept going. And it looks like, nope, you're wrong. We're going out to a new high. I'm going to head fake you. And that's where we just teased you. I kept saying this needed to get a lower low. Right? What did we hit? Exactly that. Can't make this stuff up, my friends. So in that preceding high to that low, when we finally closed, right, we kept chopping in big wicks in here. Look at the wicks. They came down and touched the 786. Big wick, touched the 78, but the candle bodies never closed below that. We retested it again. It didn't close. When it happened when we finally closed below, we went right to the targets. Bingo. What about the pound yen? Bingo. Still got a little something left on this one to get to a new lower low, but that got a new lower low than that one. So is it over and we could go breaking out? Anything's possible, but I still think we got more downside. Why? The carry trade unwind. What is the carry trade unwind? That is the Nikkei. Japanese Nikkei is our global liquidity proxy. And when global liquidity starts to evaporate, it pulls our markets down like ES, NASDAQ, etc. And it also tends to strengthen when the carry trade starts unwinding. So what do people do? And hedge funds, etc. They borrow the yen at very cheap interest. For a long time, it was negative interest. So they would basically pay you a little bit of money to borrow their yen. And then you take that yen and you invest it in like Bitcoin when it's on the uptrend, and you buy ES, NASDAQ, our tech companies, etc., higher dividend yielding type of assets. And when it ultimately comes to unwind, the yen starts strengthening, and then it reverses this. We've seen this, and go back in the history of this, go back on this big picture. When our markets crumble back in 2000, the dot-com bubble burst, this baby lost 9,000. 2007 financial crisis, this baby lost 13,500 plus pips. That's a lot of movement. That's the global economy or global liquidity getting sucked out of the markets when the markets crash. And this latest run up, I was the biggest proponent. I do everything but predict things. I leave that to the prophets. I anticipate with the best of them. I made a bold statement back in COVID when this pound yen did this type of price action and we finally got what we're looking for, and I made a statement saying, look, you might want to consider going long the pound yen. We got the carry trade that's going to help push this thing much higher. The technical picture says we need a new swing point high. Part of this corrective action, we needed a new swing point high. Everybody good? We had this A, B, C. We needed it. That was part of that equation. We've been in a downtrend. We had all that chopping price action. So I said it, and I made a statement. Over the next multiple years, this thing will go somewhere between 8 to 10,000 pips. 8 to 10,000. What did it do? Exactly that. That's the power of reading and interpreting price on a chart. Yes, it's a God-given talent, and you use the extensions. Where did we go to, my friends? From the prior high to low. Where is price going to? It hit the extensions. Can't make this stuff up, right, Emil? It did it over and over and over. So is this the end and we got the next financial crisis? Could we start correcting and then hit into the financial crisis and then we go tumbling? Well, that's the plan. We've learned from the prior market crashes, this yen strengthens big time and we see some dramatic movement to the downside on the pound yen. Got it? So is this over already and we're ready to go tumbling? Well, I can't say it's definitely over and we're going to get the financial crisis today. I don't think we will. I think it's probably going to push into 2027, push it a little further out. But with the $5 trillion in commercial real estate debt, we got all this AI expenditure. We have all these SMRs, the little mini nuclear reactors. They're looking with these data centers. They need power and all these big plays out there. Let's just keep buying. Well, they're not converting any of these nuclear reactors yet. None of them are online. They're trying to refurbish some of the old ones, but no new ones have been built. And they're trying to create these little small versions, SMRs, that they can put on a truck and send it out somewhere, but none of them are online creating any power yet. So there's a lot of bubbles that can burst. AI, all the money they're spending, that can burst. So I don't know if it's going to be a financial crisis because of the AI bubble burst. Is it going to be because of the commercial real estate $5 trillion burst? Exactly what it's going to be. So we're going to call it the Elizabeth, I'm coming to join you, honey. And when it happens, you can expect this guy to take a big dump. And I'm expecting some massive move lower. And if that doesn't interest you, consolidate this a little bit more and look at this pair as a whole. That's a declining asset, isn't it? Just keeps going lower and lower and lower. And I love this. It's a volatile beast in the Forex world. It's a beast, but I love the beast. You harness the power of the beast and you make these tens of thousands of pips like we've done over the decades of being part of this service. We've talked about it and how importantly it was that you harness it. People try to trade the pound yen and say, I'm going to trade this and I'm a scalper. I'm going to use a 5 pip stop loss. This thing inhales and exhales on a 100 pip move. So it could sneeze 100 pips and then drop 500 pips before you realize what happened. You cannot trade this beast with a tight leash. You have to control the parameters and force the price. Then when it starts breaking out, you let it run. Let the beast go. Let him go. So Emil, is this the end? We're ready to break down. Well, we talked about it and we're up pretty big on these. And this one platform, see if it'll pull it up. We're up 700 plus pips. On the euro yen, we're up 400 plus pips right there. And we're continuing the journey. So this is why when I said this technical picture, both the pound yen and the euro yen, the technical picture, even since this prior carry trade unwind. That happened in 2024. Remember that? The markets kind of tanked and the carry trade was unwinding and it was like, oh, what is happening? That thing dropped 2,800 pips very quickly. And then we started chopping and overlapping. And I kept saying even then, this chopping and overlapping, at some point, my friends, we're going to need a lower low below this guy. And you got it? At some point, we had that big run up we talked about since COVID low, and we would run that 8 to 10,000 pips. We got to where we needed it, and then all of a sudden this carry trade unwind day happened for like a month or so, and then we had some issues, and this thing plummeted 2,800 pips. After that low, it chopped and overlapped. So that's still very much corrective. It looks like this is an expanded flat correction. That initial move down was the A. All of this chop and overlap, even when we went to a higher high, that is the B. B waves can extend higher than where the A wave starts. And notice the extension on this. I guess I got to go to like a 3-day or a weekly to pull it in. That was the extension. So remember, A equals C. Mr. Tucson, remember that? The A wave, B wave, C wave. And that's why 4 years ago, or way back here in COVID, I was like, dude, you need to go long the pound yen because this is setting up a move toward the extension. And a big A, B, C. Now look how long that took to play out. We're over here in 2016, 15 going into 16. We bottomed in 20. We're topping in 26. That is a multi-year correction to say the least, but it started with this run up in 2015. Here it is 11 years later, and we're still completing an A, B, C. So what does that tell you when the market crashes again? Well, we know this baby crumbles. And what else does this bigger picture say? We're likely going back down. Down goes Frazier. Remember Howard Cosell? Down goes Frazier. Down goes Frazier. Well, this thing is due for that. But before we get all excited and say, well, what if the market doesn't crash and this punch junk euphoria continues? And could this thing still go a little higher? This thing needs to rip way up here. Look at your extensions. This thing needs to rip way up here to be what we would call, like I showed you on the dollar earlier, 1, 2. For this to be a 3, we got to get way up there. Then it could be a 3, then the correction 4. We'd have to stay above that 1 top, and this thing could launch into a bigger move. But just like the dollar stopped right at the proportions to make another lower low, this thing did it too, but on a much bigger scale, obviously, and a multi-year, even working on multi-decade, because it's been more than a decade already. And I don't think it's done yet. It's going to take a while for this thing to decline. So, man, what are we getting at? When the market crashes, we're due to come back to these lows and make lower low. Wow. If that's the A, that's the B, and this is the C, we're back to what trend? Downtrend. I showed you the bigger picture, declining asset. So we're due to come lower low. Big picture. That could take decade longer. This correction took since back in 2012. We're at over 10 years. We're on 14 years from that low to this high in this correction. And this is probably where we top out. Could we go higher? Sure. That could still go up a little bit higher. When I start to worry about my ABC scenario and lower low, if we go blasting way up here above 250 and higher, then we correct and hold this 204 area, then sure, this thing can go way higher. It's got a long way to go. Look at where this thing, its historical price action came from. This thing's got a long way it could go breaking out to, right? even if it just does one of these 618 retracements from where we have all-time high down to this current low over here, it would be tens of thousands of pips to get up there. I'm not trying to tell you that's where we're headed, but if price action starts to dictate it, I'm going to say, remember that 10,000 pip run we talked about before? Well, we got a big, much bigger one to run to come way up here if price action were so to develop that way. But right now, this still looks corrective and we need another lower low. All right, so I don't want to bore you with all that, but this is why I kept saying months ago when we did that carry trade unwind here, so I'm going to zoom that in, when that happened way back in 2024, this price action was not conducive to, well, the trend is up, this is the correction, and now we're going blasting off to eternity. No, it simply looks like a bigger ABC, right? Everybody, I'm just repeating, that's the A, 2,800 pip run. All this overlapping, even though it made a higher high, that's the B wave. And remember, A equals C, so that's the length of that, the length of this, and it could go to a 1.272 extension. That's what it's done, and it's stopped and it's reversing. That's more conducive to a lower low. So at some point, I'm still holding true to my original statement. We're due to go lower low down here at 180. When we went blasting off, we did a rinse and repeat of this, right, Emil? And lately, when we started doing this chopping and overlapping, I said the same thing. I said, this is another little mini me. We made over 500 pips in that day. We made like 500 pips in a couple of days there, very quickly. And then we grinded higher. So even when I told you those that were long, I said I'd be very careful because again, from this recent point, this overlapping correction from that low, we did the pullback just like we did there. What happened? Chopping and overlapping. And then from this one, we did it again, chopping and overlapping, even though we did another higher high. I warned you, monthly's overbought, weekly's overbought, daily's overbought. You need to establish a short position that we were due to make a lower low. Well, my friends, we got a partial lower low right there, right? And what does that look like? Could this go rallying from here? Yeah, it possibly could. I'm not going to take this rally very seriously. I'm going to hold my short position and I'm up 700 plus pips on this thing. I'm just going to hold it, let it stay. And the euro yen, the same thing. We're up hundreds and hundreds and hundreds of pips. We're in a winning trade. Why do anything with it? But it's bouncing against you. We got to get above the 618 up here. We got to get above that 216 level to take this thing seriously that we might go higher high. And that's another 500 plus pips higher. The likelihood that we go lower low is still much greater. Even though we got a partial one there, we really need a lower low than that guy, right? This is where the initial run up stopped. We corrected, and then we chopped and overlapped, did it again, chopped and overlapped, and we got part of it. We got that one, see it? So from this correction, chop, overlap, higher high, correction, we did what? Chop, overlap, we got the lower low there. This guy right there, we did get it. But from this correction, chop, overlap, that move, we haven't gotten our lower low yet. Huh. So what did I say for the longest? While this was chopping and grinding, we're due to go visit the daily magic Fibbo. We don't hold it where we broke below it. Now we're kind of testing it back above. Do we hold this as resistance and go lower low? This is still viable. The likelihood we go breaking out is very low at the moment. Why? We need to flip the script. So Emil, from that high to this low, notice where that 618 is. We got to get above, what did I say right off the bat? I said we got to get above 216. Look where the Fibbo is, 618. That's pretty much 216. Just looking at price action. We hit that level, test, finally broke above, retested. Now we're back below it. So in order to take this thing seriously, we got to get above that, which happens to be 216. And just so on this high to low happens to be my 618 retracement level. Amen. So the likelihood we make a lower low, lower high, lower low is still very high. What's the next level we need to test? Down here. This is where we tested, broke above, retested, grinded higher. So if we can't hold this zone, where we're likely going, down here and test that breakout zone. Huh. Is there something with reading and interpreting price on a chart? You betcha. Guess who else is in that neighborhood? The prior high. Look at that. Resistance, that's where the carry trade unwind came from. So Emil, guess what, my friends? If we can close below that guy, this zone right in here. So we start closing below that 208, 207 level, the likelihood we go lower low is very high. If you really want to know the level, you use your 2.2 from this low up to this current high. You can see right around that 194 is that 618 level. And then you got this 188, 189 zone. So obviously this would be very important support zone. The 618786 zone would be very important support. So what do we know? We start closing below this swing point prior breakout and this little right there, because we kind of chopped in that zone. So we start closing below these two lines. Where are we going? Down here. No ifs, no buts. So what are we looking at? We're looking at about another 600 or 700 pip run. We start closing below this let me get that number for you. That 205, say 205. We close below 205, which would be this swing point, battle zone, and this key level right there. We close below that, it says we're likely going to visit that 618 zone. So from 205 down to 195, that's 1,000 pips. Doesn't look like much. That's 1,000 pips. Emil, we're already up 700. We don't hold and we break this little support zone where we're talking about. We still got to go down a few hundred more pips, but we'd be up over 1,000 again at that point. Then what? We got another 1,000 coming. And we don't hold that, we go lower low. 74, 69, and that would straighten up this big run for 4 years. We talked about 8 to 10,000 pip run. We got the initial correction. That would be my big A. All of this is a big B, and now we're looking for the big C. And then recently we talked about this little one, mini me, the A, the B, the C. It's playing out, so why doesn't this one play out? That's why if we get into a financial crisis, this thing is going to go tumbling, and this is the tip of the iceberg. Right? That's the tip of the iceberg. We start getting a financial crisis. We'll be down here lickety split. And it may not even take the financial crisis for us to get down here. That's just part of this little correction. Fair enough? All right. What is the big picture? That is the next financial crisis. This thing, what if we just split the difference? 9,000, 13,000, we drop 11,000. But if I'm right, which when have I ever been wrong? Just kidding. Of course we make, nobody's 100%. We have high probability outcomes, but that's the key. Be selective in your trades. And when you're in your trades, be in a position of authority, like we like to talk about. And if this is correct, and this is the bigger ABC, you know what that little ABC did? We're up about 1,000 pips. What about the bigger ABC? You're talking tens of thousands of pips to come back down. And who knows how far we could extend down to. Just like this one was in the 150 area, and it went all the way down to 120, about 3,000 plus more pips. So this thing could extend another 8 to 10,000 pips. Who knows? But if this is corrective A, B, C, and the trend has been down, that's why I went to the monthly. Would you say, looking at this chart, my friends, is that still in a downtrend? Yeah, it's certainly not a bullish breakout where we're going to extend 817, 897. Maybe we push to 1100 up there. That's insane. But what would happen? We close above 486 and we then close above, say, 600. Then, yeah, 817, 897, maybe even extension way up there at 1100 would be in the cards, possibility. But that's not what's in the cards right now. What's showing, and I know I'm spending a lot of time on this, but that's why I kept pounding home, even though it looked like, man, you're wrong. It's never going to stop. And I brought this up over a year ago plus. You see, we started talking about this in 2024, that this looks like the bigger A and all this overlapping looks like a B. Well, the B kept grinding and it went right to where its extension is likely for it to go to when it's an expanded flat, where A equals 1272/1448. We're right in the midst of this. Could it go a little higher? Yeah, that's where the 1272 is, but it's going to reverse somewhere. Maybe it's already starting. But I did say we needed a lower low. We got it. If this thing is eventually, we're going to need a lower low this way. Yes. And if we don't hold that, we can't hold this support zone, then the likelihood we're going much lower, lower low, sets up that much bigger trade, which would put us into some extensions down low. Tens of thousands of pips lower. Amen? All right, I think you get the point. So what about ES? ES is bullish, man. Look at this thing. It's breaking out. It's going to the moon, Alice. It's just never going to stop. Be careful. This still, even though it's ripping, another rip. Emil, I was looking for a lower low. I'm still looking for a lower low. This is still not off the table yet. Could this be the same thing? We got the big run up. We talked about this for how many months? From October, right there, that high, this chopping and overlapping, grinding, grunting. I kept saying, dude, we need a lower low coming into this past April before we would go blasting off to all-time highs. We finally got it. Then I warned you with this initial correction, we really need something similar, but we ended up with a higher low and all of a sudden we're ripping. Well, there's my extensions. We're already starting to reach it. 76, 77, we're already there. We're extension hunting again. But don't be fooled because this is blowing up that this is going to just continue every day. If you're long this bounce, I'd definitely be in a position of authority. Last week I said I expect at least a 618 retracement out of this. Then if we close above the 618, we have a 75% chance we'd go what? 76, 77. Exactly where we are. We're done. Be careful. Could it go higher and push toward that 78? Yeah, it could. But this could also be one of these initial A wave. This chop and overlap push, the B wave can extend beyond the A wave, right where it started. So we could actually have this as a B wave and we still come down in a C wave. And why am I concerned about this ripping? NASDAQ is not broken out yet. We're just finally starting to reach toward that 618 zone. So this is major resistance for the NASDAQ. And there's still a divergence between the two. ES is at all-time highs. NASDAQ is barely starting to reach the 618 retracement. Big difference in being up here at extensions than testing a 618. So there's still divergence in this marketplace. This could set up, if we can't clear this pink hurdle, we could set up another lower low. Be very, very careful. And if you're up and you're a scalper and the mentality is, Gary, I just want to get in the markets, get a little something, something and get out, get out. This is enough. Could it go higher? Yes. If we can close above the pink box, then I'll start focusing on 31.5, 32. But that's a big if. What if we retesting that lower high trend line? We're above it right now, just barely. You can see it right there if I zoom in. We're kind of look like we're breaking it, but we have resistance right above. My 618, we're just starting to test it, and the 786 up here. So Emil, what happens if we can close and clear this pink box? Then yes, the probability would mean we'd probably go to all-time highs again. But what if we don't? Remember these lower highs? I kept saying we need a lower low, lower high, lower low. And I warned you, rinse and repeat, that we at least needed a daily magic Fibbo visit. We got it on the NASDAQ. We got it on the Nikkei. And that was the reason why when ES last week looked like it wanted to go breaking all-time highs, I said, don't be so quick to draw on that, because NASDAQ divergence and the Nikkei kind of set the tone. We needed to go lower low to straighten that out. And I did warn you that when Nikkei last week made a lower low and the NASDAQ, that this thing was going to bounce probably, even could go breaking out. So the ES didn't have to go lower low. It could possibly go breaking out. But again, I'm cautious as I was over here. We're still at a lower high. It's a very important resistance zone. Can we close today and break above that? Then we're going higher high, percentages say. If not, and we start breaking back down, then we still have the fall, and the fall is still eligible. And again, what's the swing vote? Nikkei. Nikkei is the swing vote. It's nowhere near its 618786 zone. So the ES broke above all-time high. The Nikkei is well below the 618786, and the NASDAQ is just now testing the 618. So both of these, this is not all clear. Yes, after that move, we did get the lower low. We did get the magic Fibbo bounce on the daily, which was expected. But look at this move off of this low. First move up, correction. That looks three-way. That looks impulsive down. This looks corrective up. So that still says we're probably still on this chart going to go lower low. And Mr. Toussaint, if the Nikkei global liquidity, proxy for global liquidity, goes pushing lower, then the likelihood ES continues this straight up surge higher, and NASDAQ keeps going higher, is extremely low, almost impossible. When the global liquidity gets sucked out, our markets and high yielding assets go down as well. Fair enough? Well, what if we get above this? Then yeah, we go all-time highs here too. So I won't say there's no way this thing can continue to go breaking out. Yes. But right now it's in a divergent mode. And what else do we have? On this Nikkei, we got this lower high trend line that's still intact. And until we break it, it kind of sets the tone. We potentially can go higher, but we still got to get above the pink box. We get above that, then the percentages are we're going to go higher high. But this very much so can make a correction and still go lower low. So be very cautious and take aggressive profits on ES bounce, NASDAQ bounce. If you're trading this, that bounce, take your profits. Be in a position of authority. Amen? And now let's examine this latest bounce. Let's go like to a 4-hour. See what I mean by a three-wave correction? We've kind of been doing a little three-wave, lower high, a little three-wave, lower high, lower low, another little three-wave. So where could this thing potentially rally to? Right up here. Not only is it from the prior move, the 618786 zone, but look at your 3.2. If that's my low, that's my high, and that's my higher low. Look where the equivalent movement for, if that's an A, this is the B, and I'll move up C. Equivalent move would be about 67. A equals 1.272 could be upwards as high as 68.5. So this thing could rally up here into the resistance zone, fail, and every bit still go lower low. Now, this doesn't mean we have to go up here. Remember, the markets doesn't have to do anything. We're talking higher probability type of scenario. And we're below the magic fibbo on a 4-hour. We're below the magic fibbo. So could we get the magic fibbo visit, fail, go lower low, and then break the daily? Sure. What happens if we close below the daily in the support zone? We go lower low to the extension, and that would be my weekly magic fibbo. See it? So the fall in the fall is still viable. As long as we're below that pink box, we could still go lower low. We don't hold the support zone, we're going to the magic fibbo on this weekly chart. So don't let this bullish run today and the last few days run. Well, I had some good data last week. Our manufacturing data was the highest in 4 years. But the Republicans don't know what they're doing. They don't know how to bring manufacturing back to the states. The day they sent all of our jobs, manufacturing jobs, to China and abroad was the biggest mistake. And why did they do it? Greed. Well, we could send it to other countries and we can make more money. We could pay less for employees' salaries and have slave labor in other countries, and companies could make more money. Well, the tariff talk is saying, well, that's fine. You make more money, but you bring that product that's not being made in this country, we're going to tariff the daylights out of you. So what's everybody doing? Coming back to build the manufacturing. I digress, and where's this going? That builds after the Elizabeth, I'm coming to join you, honey, going into what, 27, maybe 28, if that plays out that way, Emil. We have a few years for all those jobs to start building, get them up and running, manufacturing starting to take over. We see a little pop of that in this last release. But over the next few years, when that really starts taking off, that sets the tone for our markets to go way higher. Our market is way stronger than any other country on this earth, right? Way stronger right now. But the inevitable correction is still due. And Elizabeth, I'm coming to join you is not an option. It's going to happen. It's just a matter of when, not if, right? Because there's cracks in the foundation everywhere. Credit card debt, 5 trillion commercial real estate, bubble can burst, all this AI, billions and trillions of dollars they're spending there. It's just endless. So this is telling a different story right now in global liquidity. That is this correction over, ready to go blasting off? Yeah, it could. We kind of did it here, and I won't say it's impossible, but this lower high trend line is still in effect, and it would look better, from Liberation Day low over here to that run up. It would look better with a 618 type of retracement. And this could set up the combo bounce, which is what? 618 retracement / magic fibbo combo meal to set this thing to go stratospheric. And that's why I'm salivating that if we can get that bigger sell-off into September, October-ish, into the fall, and we see Nikkei way down here, I'm salivating to go long. So why am I bringing that up? I warned you that this could possibly not go lower low and break out, but we had divergence up here, which warranted the big sell-off. And that's why the Nikkei and NASDAQ did make the lower low like we did over here. We must have a lower low over here. See how it does that? We had the chop grind higher. We pull back, you chop, you overlap, Harold. We did make a higher high there. But I warned you about that we really need a lower low before we can go blasting off again. Then most recently in October, we started the same thing and we said, look out, that this initial move down, this chop and overlap, this lower high scenario, we need to do it again. We really need a lower low before we can go blasting off. Well, you could say, well, Gary, there's your correction, there's your bounce, and then here's your lower low. Yeah, this could go blowing off, but after this Liberation Day low up to this parabolic run higher, it will look a lot better if we can get that weekly magic fibbo visit. And all roads still say this is viable as long as we're below this pink box. Everybody good? Any questions? So be aggressively taking profit. Yes, this thing could go ripping and you got your target 31, 32, maybe real feisty to 33. Won't say it can't, but we're testing the lower high trend line. The Nikkei is well below it. It's nowhere near the 618 zone, which this is just now testing. So again, we have divergence between ES and NASDAQ, and NASDAQ had to get a lower low. We got it. So is that the end of the diversion? We're still in it. We're still clearly in it. Now, if this clears the green box, we're likely going higher high. And if Mr. Nikkei can catch up, which anything's possible, we clear that box, then all roads lead to ES going higher, all roads lead to NASDAQ going higher, and all roads, according with Nikkei, would lead to going higher high as well. But I'm not convinced this is it. I think we need more of a correction. And this bigger move, if you look at this from this weekly view, kind of stretch this out a little bit, this looks more 5-wave in this correction, right? That does not look 3-wave. It looks 5-wave. Initial move down, retrace, big move down, retrace, down. A, B, or in this case, 1, 2, 3, 4. 4 did not go into the area of wave 1. So that looks impulsive, right? It meets the rules, right, Emil? From that high to that low. There it is up there. That's a terrible line, but you can, let me zoom that in a little bit better and see if I can make this more pronounced. But Harold, be careful, because this baby does not mean we're ready to go breaking out. And we topped. We had the initial move down. 1, 2, 3, 4, 5. That looks like a 5-wave, not a 3-wave. And where the 1-wave stopped, bottomed here, this one did not go into that area. So that could be the 1, 2, 3, 4, 5. Remember the rule in impulsive that your wave 4 correction cannot go into the area of wave 1. And notice where that area of wave 1 is up there. And that's wave 4 is low. So Emil, what is that telling us? If this is correct, and this is the A, we need a B, and we go C, and we can get the A equals C. Let's just see what these parameters look like, right? So use your 3-point tool. There's the high, there's the low, and we get a rally up into the zone, a little 3-wave correction, and we rally into that zone. There it is. Come and visit the Magic Fibbo. So we don't have to go test this. That's not what I'm trying to tell you. We have to go up here first before then we can come down here. No, we could fizzle at any point. Any point below this pink box, we fizzle. We go lower low. We don't hold the 618 green box. We're going to the Magic Fibbo. Pretty simple as far as the technical picture is concerned. Amen. So this is why I'm very cautious. This looks 5-wave down, not 3, for this thing to go blasting off. And this is very important resistance zone, just like the Nikkei. We have the same for the NASDAQ. This is looking a little bit more bullish, but do the same rinse and repeat, right? What does this look like? Where's that 3-wave correction? 1, 2, 3, 4, 5. 1, 4 did not go into the area of wave 1. And we're looking at the same thing. Well, this looks more impulsive. Is it possible this is it? And we get a bounce and we go breaking out? Sure, it's possible, but it's got to clear this hurdle. And Nikkei really needs to do it. They need to be in a line. So if this thing doesn't do it, and everybody's bullish, woo, I'm buying long. I'm going long calls. I'm loading the boat long. This thing's breaking out. We're going to 31, 32. That's the extension up there. Not so fast. This daily candle has not closed above that area, right? This is the daily. This is the daily candle. This thing could reverse today and not close into this area or clear it, but I need to see the clearance. We get above it, yes, we go to extensions. Otherwise, with the divergence still in the market between the Nikkei, NASDAQ, and ES, that's why you need to be aggressively taking profits. Any questions? How do we trade that? People usually don't trade. You can trade the futures, of course, but instead of playing the futures and you want to do SPY, you can do SPY. SPY is reaching its extensions, kind of the target zone we discussed, and we're going right to it. We already reached the 1448 to 1272. We did say from this original high to low, we close above, and this is why I warned you over here. It looked like we were due to go up there. And I said, well, Nikkei and then the NASDAQ divergence, and we got all this chopping overlap. We need another correction. They needed a lower low. This one still looks like it needs a lower low. After this, you say, well, Gary, what are you talking about? We're at all-time highs again. What are you saying? This still looks corrective. Look at that chop and overlap, chop and overlap, chop and overlap. Well, Gary, well, this was the uptrend. This is just consolidation, and now it's trend continuation. Yeah, it's possible. But this would look a lot better, and this still is in the parameters of what? We have to go ripping above 785. If this thing continues, right, Emil? This thing just continues. Look at Gary, green candle, green candle, green candle. We go a few more days and we close above this 785 up here. Then this could be the correction. And after the correction, this is part of that initial move down. There's the correction. There's your three-wave correction. And this move up is 1. This is 2. We go up and get to 3. In order to make this potential 3, we got to get above that 785 or higher. In order for this to be that ABC, we just stop in the zone we're starting to test. We stop in this zone anywhere in this pink box. We stop in there, then break back below that swing, actually this swing point. Then that can't be 1, 2, 3, 4 because 4 can't go into the area of wave 1. So if we get back down around 750, the likelihood we go lower low becomes extremely high probability. Amen? So what's it going to be, my friends? Be in a position of authority. I said on our last meeting that expect we're going to make a 618 type of run. Markets may rally and test at 618 retracement level. Expect markets to bounce after sell-off rally. Yeah, that was the last couple of classes last week. Now what? We're in the danger zone for a big head fake and to say, look out, that this is still potentially an A, right? That's part of the initial move. This is another correction. So look at it. It still looks corrective right now, right? As part of this three-wave correction that way, three-wave correction that way. And if this three-wave correction up here stops in this area and cannot blast above 785 and higher, then it still looks like another lower low coming. All right? Everybody see it on the charts. What are you talking about? This initial three-wave correction, does this look impulsive? Chopping and overlapping, correcting, chopping and overlapping, and this looks a little bullish. But if this is the A, this is the B, and this is the C going up, then it should stop in this pink box. It should not go above 785 and higher. What if, William Bruce, that this punch junk euphoria continues and we get above 785 and higher? Then upon the next correction, it's going to be critical. If this is the 1 and this was the 2 and we're working on the 3, we need to get above that 785 and higher, and eventually, say it goes to 800, for example, and then we get a correction, it must stay above this prior high here, which would be about that 760. So even if we get up here and you go, yep, it's in the parameters of a 3 breakout, then the correction coming back down is going to mean everything. It stays above that level, makes another higher low over here, then breaks that prior high, then this is definitely bullish breakout. Continuation, and we'll shoot for the moon, and we'll start talking about what's the other extension, 827, then we start talking maybe 869, 895, et cetera, et cetera. But if this baby stops anywhere where it is to this box and stays below that 785, and we turn back down and don't hold the prior high, and we start breaking this low again, and remember what happens, you get an ABC, it stops in the parameters of an ABC, then you break below that low, that says lower low, and basically we get below and don't hold this magic Fibbo. Then we have the 618 zone, we don't hold that, and this thing can turn into that weekly magic Fibbo visit way down in here in the mid to low 600s. Got it? So this thing could turn out to be just that bigger correction to make a new lower low, to set up the fall in the fall to get down here, then boom, shakalaka, we get that massive run up into late Santa Claus rally, maybe first quarter-ish of next year. What's it going to be? Be careful. Be aggressively taking profits on this. If we reverse in this zone, Emil, and we don't hold above that swing point around that 750 area, so if that's my A, B, C, we reverse here, and we don't hold that correction, the scenario A, B, C, stop in this area, start breaking down, we don't hold above that wave 1 up, if that's what it's going to be, and it shows it's overlapping again, it can't be 1, 2, 3, 4, because it's overlapping, then Houston, we got another problem saying lower low is in the cards. Okay? All righty. So if I haven't gotten my message across, to please, please, please be very cautious, even though this thing just looks like it's ripping your face off rally. We haven't beaten the dust on the pound, on the tech, NASDAQ right there, and we're nowhere near getting there on the Nikkei. As long as we're below this pink box, lower high, lower low is still looming. Long as the NASDAQ remains in the same boat and Nikkei remains in the same boat, this thing could easily make lower high, lower low. And that would spoil the earnings and continuation of this blow off top for ES. What's wrong with that picture? NASDAQ, the tech companies, the big of the big, is giving us a different signal than ES. Why is ES at all-time high? I think it's baiting people in to start loading up, going long, Emil, and then it's going to come tumbling down. So I'm very, very cautious. And we're already reaching the extension. That's enough for me. What if it keeps going? My next extension is 78, 78.22 right there, 7,800. So you got another 3/4 of 100 points right there, another 75 points or so, possibly. But if we stop in that zone, that bigger picture, that's why I'm warning you, if you stop in that measurement and we can't get above 78 pushing higher, then this looks like another little corrective mess that we ultimately need another lower low. Fair enough? All righty. What about black gold Texas T, the Beverly Hillbilly? Very important zone. If we can hold this support zone and go breaking higher, then we're going lower low. Probably in the 50s. Amen? Any questions? So I warned you about that trend line, that we're definitely due for a correction. We're about to get this. Is it possible, Emil, we could do this where we end up with the higher low? That's your low impulsive move up, my little 3-wave correction. We would need a higher low, and then we go blasting off. Sure. What happens if this move up, correction holds, and then we go breaking the high? Then that 150 target, 125, 130, then 150 is definitely on the target, on the chart right there. But this, if we don't hold the support zone, which we're testing, we go lower low, puts us in the 60/50s. That's the area we're looking to go. So let's see how this plays out. What doesn't normally do well in a bullish breakout? Remember the trend line we had, that lower high trend line going this direction? Over in here, whoops, up in this area, we had that lower high trend line, and we said, well, we get above it, then we have this resistance zone. We kind of straighten this one out, and we said, yep, we're due for a reversal. But you typically, when you're bullish from the original breakout, Emil, you break above, you come back and retest. If you break that high at that point, which I was talking about last week, hey, if we rally into the mid 80s, 90s, correct back to the magic fibbo, bounce and break that higher high, then it is absolute 100%, in my humble opinion, game on. We're going to visit that 150, and if it gets real spicy, we could go up to 250. Sounds insane, but that's what's on the chart. We did the pullback. It looked like we were holding the bounce, but now we're breaking below. Let's see where we close today. And typically with a bullish breakout where you come back, retest the breakout, you don't come back, tap, and double tap. Now we're actually breaking below it. So this is more bearish than bullish. So be careful. If you think it's going to bounce out of the support zone and go breaking out. All I can say is, what if, William Bruce, this little three-wave correction plays out, it holds support, we go breaking new highs, then 150's on the chart. We don't, we break below that, and we close below, then the likelihood we're going down to the 50s is very high. Amen? All righty. So Dan, I warned you on that rally, running back to that lower high trend line last week in class, etc. Like, be careful. I think we're going to get a pullback. And if we do get it and hold it, that's a big if. It looked like it was trying to do it, right, Emil? We came back to magic fibbo. We held our ground. We started bouncing. But you typically, even on that smaller scale, we hit it, we bounced, we retested, and now we're breaking lower. You typically don't get the double tap to go bullish. Amen? You don't. So the likelihood we're going to go down in the 50s is much higher right now than the fact we're going to go to 150, obviously, for now. That can change quickly. Some new bombs, maybe they get some new weapons from China or whoever else, and things turn around and they start doing this, that, and the other. This thing can go ripping. It's the technical picture. So if we hold the ground and break above that high, 150 is on. Everybody with me? Little three-wave correction. We hold the support zone. We break the high. 150 is on the chart. If we don't hold support and we break below, then the likelihood we go into the low 60s/50s, so I'm just going to say 50s, is very high. Let's see how we close today. Can we close below the support zone? If it does, then look, 63.60 of my extensions, high probability outcomes. Then it gets a little feisty. We go into the 50s. The plan would be to come down at least to the 60s/50s. But let's watch where we close. Amen? All right, so any questions on black gold? Lower high trend line, likely when you see that trend, you need a lower low. Trend, you need a lower low. Trend, we need a lower low. Let's see where we close today. If I'm wrong, this is the primary direction, is this way. Alternate direction, if we hold this support zone, bounce, and close above that high, not just a little candle wick up here, but a candle body, then it's where? 150, my friends. Stay thirsty, 150. Right there. If this holds and we break new highs, 150 is on the target. But right now, this breakout above and lack of holding the magic fibbo starts to say we close below the support zone, then what, Emil? We have a 75% chance we're going to 63, 70% we're going to 60. And what happens when we make a new swing point low? Lower low. So that's why I would say we'd head to the 50s and retest this guy down in here. Amen? So let's see where we close today. Again, if this thing goes ripping, rockets fly, this happens, ships get blown up in the Strait of Hormuz, rinse and repeat, same old nonsense, and we break above and close above that, 150. Big move up. We don't, we continue to close below, then we go lower low. We do that, first target 63, then 60, then 55. What about gold? There's gold in them there heels. I started nibbling when we got the lower low. Kind of nibbled a little bit more when we got another lower low. Now this could easily be yet another false bounce where we rally a little bit and we still go lower low. All I can say is I said at the point, this is not back the truck up, load the boat right here. We need the lower low to do that. But this was definitely lower low, even though gold in this scenario here doesn't show a lower low there. We did see it on silver. We did see it on the proxies, like the miners, B miner, Barrick miner, mining. And we saw it on Ashanti, AU, and we saw it on Newmont. So it could be that we've bottomed and that is it. That's why I got into this. But if we can still get the lower low, that starts to be the back to truck up zone. Keep adding and adding and adding the lower we go before we go blasting off. Is this lower low in place? Right there? Maybe. That's why when we got the lower low, I did say this is buy zone. We get lower low again, that is back the truck up zone. If we could dare do something like this, which I doubt it, but Emil, what if I bought some here, another Fed fake out, we come down here, buy some more, and I think it's ready to go blasting off, so I bought it, a good bit more, and it starts going up, you think, yep, I'm so smart, and then it does one of those. This is absolute. Get on your knees and thank heaven above if it gets down and tests that weekly magic fibbo. If it does that, you talk about, I'm borrowing some trucks to back them up for that next big push. It could be that it's already there. That's why I said, let's nibble. I nibbled a little bit more the other week when I told you that. Look, it didn't get a lower low. It still likely may, but this is a zone you could keep adding your position because this thing will go breaking out. My humble opinion, we're going to 7 to 10,000. No ifs, no buts, no ands, no exception. That's where we're going. Question is, do we got to correct further to get there, or are we starting to bottom and look for the rip? And the reason I'm cautious about it ripping just now, not a cautious will it ever get to 7 to 10. Absolutely, it's going to get there. But in the current price action, it's a little choppy. It's overlappy, right? This does not look real bullish right now. From that low, we've been chopping and grinding sideways. That could just be part of the bottoming process and then we go blasting off. But another lower low down here, that 3,800 zone would be ideal. Anything under 3,900 is definitely significantly add to your position. Anything pushing the 36 down there, which is the weekly magic fibbo, that guy over there, that is get on your knees and thank the good Lord above zone, because all roads, whether we bottom now, we're going to 7 to 10, we dip in the here into the 38, we're going to 7 to 10, or we stair step one more time and get down to that weekly magic Fibbo, we're going to 7 to 10. I'm just not convinced we're definitely going to get 36 down here, but I really would like to see a real true another lower low here. Fair enough? All right. And like we said, silver did get our lower low. And we got a retracement. Again, I don't like the double tap here on the bounce. So is it possible if gold's going to give us another lower low, silver's going to do it too? Yes. I would like to see silver ideally go below 50 or at least 50. That's where my alert is. Am I going to be fortunate enough to get a sell-off to reach that level? I have more buys down here. When this baby made that lower low, that was the buy zone. We go lower low again and reach 50 and below, that's the back your truck up low. If we go and touch the weekly magic Fibbo, which is below 50, that 45 to 48 zone, this is rent a truck to back up. Again, what I mean by that is no buy, sell to hold. That's my plan. And that's the technical picture screaming. If we can get that correction, it's setting stratospheric move to 150 to 200. Whether we've bottomed already, where we're going, 150 to 200. Whether we go lower low and touch that 50 mark, Harold, and I add more, we're going to 150 to 200. Whether we get lucky and get a big push and test that weekly magic Fibbo down here, then it's back the truck up, look to the heavens and go, thank you, we're going to 150, 200. You like my statement? I'm 1,000% confident on 100% scale. The dollar is going to go to 130. The euro is going to go down to that 0.8, 0.7. The pound's going to make a low below parity itself. So we're in that 0.9, maybe 0.8. And I'm 1,000% confident on 100% scale. Gold's going to 7 to 10,000, as I am silver's going to 150 to 200. So do we get lower low, then get there? Have we already gotten the low and we're in the buy zone we talked about? We're already nibbled and we can keep adding the position while it chops. It goes lower low, cost dollar amortization there. We dollar cost average, buy more. It goes lower, buy more. The lower it goes, the more I keep buying aggressively. And then when it's up at 150 to 200, we smile and take profits. So any questions on gold and silver? Could we go lower low? It would look better. So this weekly is just kind of chopping. Go to your lower time frames. That's the initial move up, the chop and the overlap. That's not real bullish. Was it a series of a 1-2 and a 1-2 and a 1-2? No, that kind of messed it up. Emil, this can't be a 1-2, 1-2 because we made a lower low. So this is not this unwrapping. It doesn't mean it can't possibly have bottomed here, but this is definitely not a 1-2, 1-2 going 3 of 3 to the upside. And this thing's going ripping. This could be a bigger A, B, C type of move. And we could even go equality from that low to this high to that higher low. Let me fix those numbers. Actually, the new low is now here. Right? So is it possible this could be just a bigger time-consuming ABC, and we could rally toward maybe 60 up here, 62, and still go lower low? Yeah. But when we got that lower low over here, I said it. It's in the archives. It's in our classes. That's the buy zone. When gold and silver make a lower low, that's when you want to buy. And if it rallies and makes another lower low, buy a bunch more. And if it does it again, buy more. So could this thing fizzle down in this area, fail to break the magic Fibbo, or come up into this zone and fail and still go lower low? Sure. I don't necessarily like all that chopping and overlapping. It would look better if we made, another lower high over here. I don't mean lower than that high necessarily, but a lower high on where silver was, a lower high over here and another lower low. Yeah, it looks better if we get a lower low than this low. Because of what? The initial move up and all this chopping corrective action makes it look more like an A, B, C. Then we go lower low, then that sets it up. So I'm not guaranteeing this by any stretch. I'm already in it. I'm in it to win it. But if I do get that lower low and we hit that 50 mark, that would be ideal. That's when I'm going to add aggressively at 50 and lower. All right. All righty. Let's continue. What about Mr. Bitcoin? Bitcoin, is that the bottom and we're ready to go ripping higher into the full-blown Bitcoin mania? No, this is not that. Could this be the bottom and that's as far as we got to our 50 to 30K zone? I don't think so. I certainly don't. Look at that low. Chop, overlap, chop, overlap. I can't be a 1, 2, 3, 4. We're already overlapped into that. So this still looks corrective. But is it possible Bitcoin can rally up here, get people to get sucked in? Woohoo! Bitcoin did a move up, a retracement. It's blasting off, man. I better get in. FOMO is kicking in. Harold, I gotta have it. Still go lower low. I'm not convinced we're at the low until I see price action prove itself. And B, remember the bigger picture on Bitcoin. Every 4 years, we have this blue line, which is the Bitcoin halving. 12, 16, 20, 24, and yes, the next one is in 28. What do we know about Bitcoin halvings? Bitcoin rallies 12 to 18 months post-halving. Then it tops out, it declines into the winter for about a year. Topped out in December of 17, bottomed in December of 18. Then over here, topped out in November of 21, bottomed in November of 22. Can't make this stuff up, Harold. Topped out in October of 25. We should bottom in October of 26. We're in August. Is it possible it bottoms early? Anything's possible. But every time going back the inception of Bitcoin, post-halving, 12 to 18 month run, a year decline, bottoms, starts heading back to the next halving, and then the 12 to 18 month run, a year decline, starts climbing toward the next halving, then 12 to 18 month run, then year bottom, and we're not there yet. So I still think we're likely going to hit 50 to 30,000 target by October is the plan, because that's what it's done every other time. So email, 4 times in a row does not make it guaranteed. Past performance is not indicative of future results, but this is a strong conversation that it bottoms every year later and then it starts to take off. It bottoms and it takes off. It bottoms and it takes off. So the plan is to been buy low, sell high, buy low, sell high, buy low, and we put this nibble zone at 50 to 30,000 before Bitcoin finished its climb up. I was mentioning this was the zone we were looking for, right? So what did we say? I begged, pleaded, and sent smoke signals. I just preached to the choir day in and day out during these weeks when Bitcoin is below 20,000. I made strange comments like, you're committing a crime if you're buying Bitcoin below 20,000. It's such a steal of a deal. I said, you're going to hate yourself if you're not buying Bitcoin below 20,000, because the plan was to go to 150 to 175. And sure enough, from 20 to 126 is a tremendous run. And yes, you can hold me because I didn't get to my 150 target. Damn it. We didn't get to 150. But is anybody really disappointed when you're buying at 20,000 and it went to 120 and above? I called it out when we're up here. You need to be taking profits off of this run. Yes, it could possibly go higher and still reach our target, but we're there. We reached the 12 to 18 month. And when did it top out? Exactly 18 months post halving. When's it going to bottom? Well, every other time it's bottomed 12 months later. Huh. 12 months later. What about that? 12 months later, this thing bottomed every time. Well, we're not 12 months into this yet. That is October of this year. Again, what if it touches 50,000 tomorrow? I'm buying. Next week, I'm buying. Next month, I'm buying. October, I'm buying. What if it hits 40,000? I'm buying a bunch more. What if it dips its toe into 30,000? I'm buying a bunch more. Backing the truck up. What's the plan to go above 200,000? When are we going to sell? When we're at the 200,000 and above, A, or B, when we're reaching fall of 2029. Got it? Buy low in 22, we sold in 25, we buy low in 26, and we sell in fall of 29. Why is that? The next halving is here. 12 to 18 months later puts us into the fall of 2029. September, October, maybe November. Got it? We get to 50 and I hit 200, I'm taking profits. I don't care if it's still got 2 months to go before my 12 to 18 month period is over, or we're hitting 200 at 12 months. I'm taking profits. Then I'll look for a technical picture, maybe buy some more with that money and look for the next push to go 18 months. But the plan is to go from here to above 200,000, like the plan was to go from below 20,000 to above 120. Well, it said 150, a little shy of that target. Well, Emil, would you be disappointed if you buy at, say, 40,000 and we don't get to 200, we stop at 180? 40, double to 80, double again to 160. Would you be disappointed if it stopped at 160? I wouldn't. Not in to say the least. I'd be thrilled. But the plan is to go above 200. So, in closing, remember, the software runs on NinjaTrader 8. It runs on MetaTrader 4. And we're in the process of working on MetaTrader 5. I'll let you know when it's available. All of you that are current members get free access to the new MetaTrader 5, as you have with the MetaTrader 4 and NinjaTrader if you like. But I think most people trading MetaTrader 4 are going to want to try MetaTrader 5. That's why I figured I'd go ahead and do that. And as soon as it's available, I will let you know. You'll know it's getting close when I start to show you the software on a MetaTrader 5 platform and I start showing it to you. But that's the plan. And don't forget about your tools. We just missed the 50. I can't believe it didn't register for us, but we did the, what is this called? The London breakout. It sets the high, it sets the low off the first hour of London automatically. It pops in a long trade, a short trade, OCO. And if it breaks the low, it sets your shorts, put your stop loss, take profits in there. You can break even +1. You just click that tab. Now we're locked in. This is now a winning trade. It did it on pound New Zealand, did the same thing. So we just missed the 50 pips. We're in a break even +1 scenario. Is it going to play out, or do we get pipped out for a little profit? But we've been doing well. We get 150 pips, 100, 150. That's 300 in that trade, 300 in this one. We got about 100 plus on that one. So it's a tool. Not trying to tell you have to use it, but if you are going to use it, do it in a demo account first till you get used to how to set it. It's pretty much simple. I have the template for you. You come over here to templates, and we have the right there, MPA breakout light blue and the white. Those two are already set. It puts the breakout indicator on the chart. It puts the breakout pending order trade management system and does all that for you. And it's been doing very nicely as of late. When the market starts trending, it does very well. During chops, you still can make profits in there. That's why we get to these BE+1s. And we're in these scenarios. I'm just shocked it didn't take profit 2. Official take profit 1. We missed it by maybe 1/10 of a tick. And I thought I was going to hear my tune, but we didn't quite get there. Still viable as the higher time frames are still slingshotting lower. My daily is still pushing lower, and my weekly is still pushing lower. So we may end up winning this. If not, it'll pip us out for a little bit of profit, but it's been a good trade over the last several weeks. You set it to the hourly time frame. Why? Because it's set out to break out on the hourly candle for the first hour in London. Can this be adapted to work on stocks in a stock market? Yes. First hour trading, you set your breakout candle. It gives you a high and a low or whatever that is on a stock. And then if it breaks the high, it'll do a long, and it breaks the low, it'll do a short, and it triggers the long, it cancels the short, it triggers the short, it cancels the long. It does all that automatically. What a beautiful design of AI type of self-management, whether I do it manually or I let the thing do it auto, it's there for you. So with that, good luck. God bless you. I love and appreciate you. I'm humbled and honored to be your mentor instructor. Join us again tomorrow. And again, remember the cycle of this movement. Be cautious, to say the least, of this rallies, because we're at the ABC type of move. And if we start turning back down and we break below those levels, then we're likely even going to get the bigger fall in the fall. I really was looking for ES to give us the lower low, but we did get it with the NASDAQ. We got the daily magic Fibbo we were looking for. We got it on the Nikkei. I warned you last week, expect a bounce. But again, this Nikkei still is well below the resistance, Harold, and it looks more 3 waves, so likely we're going to go lower low. That's why this ES, you need to be aggressively taking profits, because this thing could turn around and go lower, or the next stop is 78 up here. But the more it goes parabolic and the more this overlap still says we still could still be in a what? Initial move down, A, chop overlap, B, this is the C. We're still at the parameters, so this baby has to get above 78.22 or higher. Then upon its retracement, has to stay above the 76 area. So if this is a 1, 2, 3, 4, then it must stay above that swing point to be very bullish. And if not, and it fizzles out, and we can't get above the 78 plus or higher, and we retrace back below, then it's likely we're going lower low. So this could still, I'm warning you that this initial move could be the A. This chop here, even with the breakout, expanded flat correction, reaching toward the extension, that could be the B, and we come back down in a C. That's still viable for us to get this official visit of the daily magic Fibbo. We don't hold the daily, then the weekly opens the door. But I'm not convinced that NASDAQ, this is the first day, is it going to close above the pink box? Then if it does, then sure, we look for 31, 32. See it? But if this thing fizzles and we close back down, we don't hold the support zone. We got the support zone here, which is the 618 zone. And if we don't hold that, we're going lower low, which is the weekly magic Fibbo. So why do I keep bringing this up? Because I want to see it. I like it. I want it. And hopefully we'll get it. All I can say is, Emil, we get down here by October, finish the fall in the fall. We get that swing point low, sets up the next gargantuan move to the upside. Amen. All righty. And of course, our global liquidity marker Doesn't look very bullish. It's nowhere near breaking out. It's still below the lower high trend line. And this looks impulsive down. So this looks three-wave correction up. So all I can say is, what if, William Bruce, this corrects, fails, we're likely going to come lower low. And when global liquidity gets sucked out from 65,000 down to about 45,000, that's $20,000 of global liquidity. What is ES going to do? It's going to get pulled down. What is NASDAQ going to do? It's going to get pulled down. What's Dow going to do? It's going to get pulled down. Now, if this goes breaking out, this could be the, continuation, sure. Then we shoot for 73.75. If this thing goes way up there, ES is going to continue. NASDAQ is going to go breaking out. Dow is going to continue breaking out. But if this baby reverses, which is still in the cards, then all of those can start ripping lower. Got it? All righty. So with that, good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor instructor. Join us again tomorrow. That's it. That's all.